Ira Epstein of Linn Associates with your financial market wrap-up. And here we are now on the close of business for part of one day and the beginning for the next. So this is 5 p.m. Central Daylight Time on Wednesday, the 31st of July, 2019. But we're already, and I waited intentionally, I wanted to see the opening for August 1st trading, which begins at 5 p.m. Central Daylight Time today. So we've had action. And for those of you that get my written updates, that's where my commentary comes in. Many of you write, give me more explanation here. This is a free video, my friends. How I support this is with the subscribers. So not going to give you everything that we have there. I keep that for my paid subscribers. Just please understand that's the way it is. You don't go to your doctor and say, do this for free. Well, that's how I feel about my work. If you take a look at the market, you're down again tonight. The dollar was up strong today, and it might even be up tonight again on early trade as we're seeing weakness come into a number of the other currencies. With the yen up a fraction, as that could be some safe haven buying as people are concerned what to do. Bonds and notes up. You're sharply lower, though, in the, if we take a look here at the gasoline, the Brent, and the crude oil prices. And part of that is because the Fed reiterated that the world is in a slowdown and that their move today was an insurance move, if anything. Now, the highlights of the written statement, not the press conference with Fed Chair Powell, were that the Fed lowered the Fed funds rate by 1/4 point to a range of 2 to 2.25%. The vote came in 8-2. The two dissenters were against any rate cut at all, which meant that no one on that voting block voted for a 1/2 point cut. So those that thought that was going to happen, they were really wrong. The Fed said the key reason for the cut was muted inflation and worldwide developments. Talk for trade not going well. The Fed did something that I predicted that they might surprise the market with this morning when I was on Bloomberg at 9:50. I said, don't be surprised if they do a runoff of the balance sheet and end it earlier. And the reason is that fights the point of cutting 1/4 point. There's no logic in that. That's when you run off a balance sheet, it's actually monetary tightening. You're not putting money back in that matures. By stopping that, they have to reinvest it. It's two levels that they've taken together. It's not super strong. And what the Fed did to scare the market, and it caused the stock market wild gyrations, wasn't so much the statement, but it was how it was explained, which I don't think the Fed chair did a great job of. He stumbled. And at one time, it sounded like it was a one-off rate cut. We've seen that before in the 1995 area. Then he clarified that it might not be, but he said he doesn't see this as a lasting cycle of rate cuts. It was confusing, and the market took that as being a bit bearish. Now, other people might say, well, what about the metals? How come they didn't rally off that? Because their enemy is the dollar, and it's like a race now. Brazil this afternoon cut its interest rate. You've got the Bank of England tomorrow, which I doubt, I think it's tomorrow. I don't think they're going to do anything. They've got their hands full. What's Brexit going to do one way or the other? But we know Europe wants to cut rates. There was no trade deal made between the U.S. and China. And frankly, the way this is going, I think a majority of analysts are going to think no trade deal can be consumed until the new president, be it President Trump or whatever, who's going to win the next election, gets put into office. So from the looks of things, that is a negative, and I think that in part is weighing on the energies as well, because you don't have deals going there, and that means no matter how the Fed dresses it up, without trade deals, one of the reasons they're giving you this insurance cut is they're fearful, what if those trade deals don't materialize? Remember, we still have Europe to tackle, and we haven't done the Canadian-Mexican signing. So those are not the best things. What the Fed did say, by the way, is the economy's doing well. It's met their expectations. This is more of a preventive measure than it is because we're in a recession or about to go into one. Very important. The weekly area chart of closes with the action now, this 53-point decline for the moment. It's only Wednesday. This is a close-only chart of a week. You're down 53 points. You do realize you can make that up before Friday's end. But for the moment, the market has got a higher high, lower low pattern. Is the bias up? It certainly is. You're still over the 18-week moving average of closes. When you come to the daily chart, you can see how the market let go today. We had something of a distribution pattern anyways going on. I think you'd agree with that right through here. And then the market fell, and tonight it still hasn't gone under the day's lows that it saw. It was down nearly intraday, nearly 500 points or so in the S&P. What you did do now is, though, you've got lower highs, lower lows. You've broken the uptrend that you had in place. Okay, we've seen that before in the market. It seems to recover each time. That's the way to look at it. Where is the market in relation to moving averages? Well, yesterday it paused. I think you'd agree at the 18-day average. It was fighting its battle. But as I said, you never know what's going to happen to the market reaction to what the Fed does. And this was a big meeting. This whole week's been big. You know, the Fed told you one thing, they're slowing down. They think the labor market's good. Is that code word for Friday still a good labor report? Well, how will the market view that? Because it's going to look at consumer spending. But the market did break through everything. So I think you can say the short term, we've got the swing line down, the bias down. One of the potential numbers is the 2903 2904 area, which is the 100-week average of closes, with resistance in the short term back up at 300150, which from here isn't that far away, right? Then you take a look at Bollinger Bands. Well, my gosh, you went from the upper Bollinger Band, stopped at the 18. If you drop, that could be the support. It hit it, and that's what the market's fighting at. Now, if it exceeds it, that puts even better into play the 100-week average of closes, and it still keeps the market with that 300115 resistance, which from here is round figures 29 points. When you take a look at momentum, it's down. So we have the trend down. The bias is down because you're under the 18-day average, trend defined by the swing line, and momentum down. Positive, you've hit the lower Bollinger Band, a downside target, and I think you're seeing short covering at that number. Should you exceed and have another leg down, at least I have an idea where that market might go, and that's about 65 points lower. Doesn't mean you have to stop at the 100-day, but it's a potential. When you come to the NASDAQ, well, I'll be a son of a gun. Yesterday, lower highs. You can see we're fighting at that 18-day average. How often have you heard me say from the 18-day averages where markets decide to go? Now, trying to figure out the reaction to a Fed, I'm the first to tell you it's very difficult. But if it lets go, the potentials at least we can see. The lower Bollinger Band, you went there and you're holding it in early trade. Momentum down, not oversold. Trend down, bias down. The Dow, identical pattern, but not the same. I shouldn't say identical, similar. It managed to sneak out, if you take a look at this. It had been in a downtrend and hanging at this 18-day average. You don't disagree with that. Today, this morning, if we looked at the last swing line high right here, it's 27,255. Early, well before the Fed, the market made the higher high, and then it let go. It found its support also at the Bollinger Band, and unlike the other markets, it's already in oversold condition. So I still think the pros at the Bollinger Bands are stepping out of if those that went short. This was an algorithm trade day. I don't think this was a position person day. These were the algos moving back and forth in dramatic fashion. Nothing was short-lived about it. And as I said, you came up in the Russell, which was the best. Why did the Russell outperform the other indices today? Because at the end of the day, you can see this market still stayed over that 18-day average and didn't make it down here. Because in the short term, the Fed lowering interest rates affects American companies more than anything else in the short term. And that index paid attention. Where did it go to? The upper Bollinger Band. What do I tell you? After you've hit an 18-day average, that's a resistance point. And here's the market falling back, and I would expect that to be a support point with the next layer under that right here at the 100-day average. Momentum is down, no trend. You've hit an upside target. I look for choppiness right through there. Then in the VIX. I couldn't have been clearer yesterday. I had somebody write me back on the YouTube channel and questioning me. What I said, and I'll repeat it. Selling a put when the market's at 11 or so is a lot different risk than selling a call into a Fed meeting up at 15 that can go higher. In other words, to take the market from 11 to 8, you got to drop in round figures, a third of the value. To get it from 15 to 20, 25, you're not dealing with any percentage that approaches that. 20% moves, things like that. Very hard to do. You have unlimited risk here. You have a finite risk when you write a put because it can only go to zero. Do you understand that? That's the concept of it. By the way, I don't know if it can only go to zero because we saw interest rates go negative, so that may not be a right statement, but the concept is here. By the way, I want to go back to this. Tomorrow's when I expect to see the pros make a decision. Somewhere along the line here, I expect to see them start selling calls into that Bollinger Band, but I didn't think it would be today. I don't think anybody was trading today that's a normal trader. The pros are different than a lot of us. They're in and out all day. In the T-bond market, you went up to the upper Bollinger Band with all that fanfare. Today you stopped. You're overbought at the top of a band, still got these numbers to go through. Now, a lot of people think we're going to crack the 2% level and get maybe down to the 175 number. I can't argue that. I do not believe that the Fed is one and done. It's that simple. So it's a question of what the market wants to do from here. But on the first challenge after hitting an 18-day average, what I teach is the market likely sees pros if you get up to an upper Bollinger Band, getting out, or if you go down to the lower one, getting out, one way or the other. In the 10-year note, you made a run. Let's look, see the high. You tell me where you went. You went to 127, 22 and a half. You just missed the Bollinger Band by a half a point. The concept was there. And I do think the pros will be coming out if they get the opportunity there. Just drifting still at the 18-day average in these tight ranges. These tight ranges in both these markets will set up the next trends. It's like a spring in a pipe. It keeps winding until it breaks out one way or the other. TLT, here's how you looked yesterday. If you go up to the upper Bollinger Band, you know what I'm going to say before I say it. Expect to see resistance at that number. Just what happened. You're overbought now. You've hit an objective, probably ready for some choppiness. As traders tonight have to remember that when all this happened, Asia's asleep. Think of the time difference. They wake up, they react. Europe, when we come out at 1 with our report, and then 1:30 to roughly 2:30, the Fed chair is talking. That's a minimum 8:30 at night in most of Europe, right? Well, most people aren't trading. They're at home. They're doing what they are. That doesn't mean the pros aren't at work, but even the pros, this is August 1st. There's a lot of them going on vacations or mentally going on them. So tomorrow's the more interesting day now to see if it continues on. Dollar index, you have an embedded reading that just keeps running up. And why is the dollar up today when the Fed cut an interest rate? Because people will say, well, if you cut interest rates, that should be bearish your currency. Well, the Fed cleared it up. They said it's an insurance cut. It's not because we're in a recession. That's one way to look at it. The Fed's concerned about world trade, another thing that they're looking at. They said that the U.S. economy's met its goals. That gave the dollar the bid. Whether it holds there, that's what we have to see. Now, in the eurocurrency, this was all bear news, obviously. If we're cutting rates, what do you think they're going to do at the ECB? This was the go signal. Mr. Draghi, wake up. It's time to go. And the market let go to the downside. It's riding the band. Now, does it embed or not? But the market from up here had already hit this Bollinger Band. I don't know if the pros were in this market or not. British pounds, as I said, we're going to be getting the Bank of England monetary statement. They're in a son of a gun place. I don't think they'll change their policy because they don't have any idea where they're at on Brexit. I don't think anyone in Parliament knows what's going to happen. Are they going to ask for an extension? What are they going to do? That keeps this market, in my opinion, still well bid. Now, if in their policy statement they should start talking about the need to raise interest rates, that could change things. So you've got to read their policy statement. In the Japanese yen, lower highs, lower lows, bit of a reversal today when you were trading the market. It held actually pretty well after it made an assault against these two numbers. It got as low as 92.03 and a half, 91.98 to 91. Well, 91.98 basically is the multiple support of two numbers, the Bollinger Band and the window envelope bottom. It is oversold. I'm guessing people are close to maybe even taking some money off the table. Bitcoin, the market today rallied back to 102.95. It's got to take out that high. Now that high, just so you'll know, I can't show it. This chart won't let me go back. There's so few days. That's going to be the key. I'd have to put a cursor over it. But the market lost its bearish momentum. I think you see that right through here. And when it did that, which was today, that puts the market on track to maybe make a run at the 18-day average. Being short now could be a little more dangerous. Crude oil, look at how the spread is coming in again. Once you hear the Fed talking about world slowdown, what do you think that does for the demand for oil? I'll put that in your little thing to think about. What is the chart in the Brent crude? Lower and low, higher high. Market seems to be trying to fight at this 18-day average, trying to figure out what to do next. In the WTI, same thing, lower and lows, higher highs. These are no trends. I'm looking at the markets fighting right through here. If you get a rally, maybe you make it to the upper, 100-day average of closes, but wouldn't surprise me if you just fight at that 18-day. Rebob gasoline, same thing. The battleground's right here at the 100-day and the 18-day average of closes. And in nat gas, you did have a good rally today, but it could be a one-off. They got hot again in the Southwest. The market saw some short covering. You lost the embedded reading, which often leads to a move between price and the 18-day average if it can keep it the next day. So when we reopen tonight, we'll have a better idea if that's going to be the case or not. But overall, we get an EIA number tomorrow, so we'll have an idea as to what's going on there as well. I'll be writing detail tonight. And if you haven't ever seen my info, maybe this is when you do it. First off, in the morning, what I start you with, and it's my videos. And at 6 in the morning, I start recording, which means I'm getting up way beyond that central time. And I'll look and see what's going on in Asia, what's going on in Europe, what's on store for the U.S. markets and reports. We already know we're getting tomorrow a bunch of key numbers, and then on Friday, the jobs data. But the idea is to give you ideas. And off those ideas, it may go with your trade. It may reinforce what you're thinking of doing or not. I will cover typically 40 futures charts and 5 or so ETFs. I'll talk tech analysis, fundamentals, and I'm going to give you specific points of entry, exit, profit objectives, and stops. That's part of the exit. This just might be what you need as your day gets going, because I don't know you. This is a thing that I cover in this sequence each and every time. You can pull on the bar on the bottom. It'll take you right to the section you want. So you don't have to listen to the whole video if you're interested in energies or grains or whatever. You go where you want, and there's a lexicon on the side as well. This is not free. It's 26.5 cents a day to start. You get that for 30 days. After 30 days, in fact, during that, you can cancel. You can do whatever the heck you want. If you decide to go on, it's $15 every 30 days. But if you do a 1-year subscription, it ends up being for 1 year, 13 times 12 months, or $156, another savings. I hope you take advantage of it, because here, I'm not going to ever give you the information I give the subscribers. Hope you appreciate that too. I'm Ira Epstein. You can call my staff to help you if you want to do this. If you want to look at it on your own, you can. Go to our website, www.iraepstein.com. You can get there by clicking here as well. And once you are there, go to education or research. You'll see a pull-down menu come in there, and you're able to go to morning subscriber video to help you. Remember, we're going to get a whole new look to that website in about 8 to 10 days, so get ready for that. It'll be exciting. You have a good day.